Hello traders, today is the 29th of March. My name is Hornsey Market, analyst YouTrading. And today I'm looking at an inverse head and shoulders in the euro versus the pound. Okay, before we get into the actual technical analysis, we're going to look at YouTrading.com for its heat map. We see here that the euro is currently the strongest currency across the board. The Swiss franc is the weakest, closely followed by New Zealand dollar, pound, and US dollar. So overall, risk on, risk off, no clear direction. Bottom left-hand corner is kind of green. Top right-hand corner is red, but obviously the euro's affecting that. So no clear direction. We're still trading on news headlines. And if we go to an economic calendar, we can see that German import prices month over month and year over year for February came in less than expected. So that's actually importing deflation. So that's good. German GfK's consumer sentiment for April is below expectations. That's basically saying that the Germans are worried about what's happening with inflation and also the war in Ukraine. Looking down, UK mortgage lending for February and UK mortgage approvals in February, both below expectations. So the Bank of England's rate hike cycle is now taking effect, and we're starting to see people not be able to get credit or not actually want to go for mortgages. So that's probably bad for sentiment in the UK, as when house prices go up because people are getting credit, people in the UK feel richer and they go out and spend more money. All right, later on, we've got US monthly home prices, US case-shiller here, and then going into a Fed speaker. And then at the US futures open, we've got US consumer confidence, US jobs data. So there's still quite a bit to go through. However, if we go to the actual headlines, a lot of it is about ceasefires and talks, and then it'll be talking about whether or not Europe's going to pay for gas in rubles come the end of the week. So Ukraine negotiator said that the ceasefire is being discussed, and I think that's why the euro is getting a boost today. Russian Kremlin says we'll know tomorrow, or today or tomorrow, if peace talks are promising. So there is a worry that this all falls down flat and we'll get a reversal. So if we just go to the technical analysis now, looking to the left-hand corner up here, 61% of traders are trying to go short the euro versus the pound. I tended to agree with them. I thought that was a good idea whilst the Ukraine situation was getting worse. Obviously, if ceasefire comes, the euro is going to get a boost, and 61% of traders are obviously moving towards being a crowded trade, and this sentiment indicator is kind of a contrarian indicator, so we should be looking to go long. However, if we look to the left-hand side here, we had this descending channel, which I was expecting to break to the upside. This is from mid-April 2021. We're obviously approaching April 2022 now, so we've had this low here on end of January, another low 6th of March, and then another low last week. This is potentially an inverse head and shoulders, and people will be looking at that. If we look to the left, we did a sweep of the double bottom down here. So we've taken the liquidity, we've tried to press lower, we haven't been able to do so. We've got through 2 weeks ago's lows, and now we're looking to see if we can take the high. If that happens, then there's been a definite shift in momentum. Obviously a low, a high, then a higher low, and then potentially a higher high. If we get a higher high, then that could be seen as a shift in momentum, maybe a change in trend, in which case we'll be looking to last week's high as support. So if I just put that line in as a reminder, so once we get above this swing high here from mid-March, if that happens, this inverse head and shoulders comes into play. We're looking then for last week's high of 0.84157 to act as support. If that happens, if we get a retest, so get this break higher, get a pullback to that level, and then we're looking for higher highs. Obviously, that's still to come. We've got to get through the rest of this week, got to get through these negotiations, got to get through NFP for all that to happen. Inverse head and shoulders patterns, I think more often than not are continuation patterns, because if they fail, then all the stops are below the right-hand shoulder and this head, and the bears will take advantage of that liquidity and keep pressing lower. If they do press lower, we have to look to the left here, all the way back to 2016, and the high here. So the Brexit sort of week before Brexit high is the next level of support just below the 0.8. So if this inverse head and shoulders pattern should fail, then we're going back down there. If the inverse head and shoulders pattern actually plays out and we get a bullish move, if we look to the left, obviously everything to do in this descending channel has been tested. The next nearest most significant level of resistance is up here, the lows of this January candle, 0.894 to 0.895 would be the target. So that's what I'll be looking to up on the upside. 0.8 is where I'm looking to the downside. Just waiting to see what happens this week, and then yeah, we'll take it from there. Just going down to a daily chart. You know, we could get a pop higher, like I said, above that swing high. And then if we look to yesterday's high, or maybe even Friday's high, that still needs to be tested. So we could, you know, potentially see a slight pullback down to the 0.837 before going higher. Something else to look forward to. But yeah, that's it. That's what I'm looking for. Just waiting for confirmation, see if we can get above the swing highs. Obviously keeping my eyes and ears open to see if we get a ceasefire in Ukraine, in which case we should get a very big impulsive move to the upside. Okay, good luck, and I'll speak to you again tomorrow.